Hi, Woody Henderson here with American Dreams Real Estate, and it's time for the August 2021 San Diego housing market update. Well, it's been an interesting month. I'm going to go ahead and share my screen with you, and I'll show you the latest of what's happening in San Diego real estate here. There we go. All right, this is the San Diego housing update, August 2021. We'll be showing you data through July of 2021 from the multiple listing service. Today, we'll talk about San Diego key metrics, median sales price, home inventory, both at the local and the national level. We'll talk about buyer and seller traffic, mortgage rate forecast, and then I'll finish up with a summary and some insight into what we can expect in the future. So key metrics, the median home price in July came down slightly from June to 749,500. However, in the last 12 months, home prices are up 18%. Market time was level at 19 days. However, that's 40.6% below where it was last year at this time. The number of active listings is up slightly from June to 3,834, but that's down 38.3% from the same time period last year. We have 1.1 months supply that went up slightly, but it's down 50%, half of what we had last year. And the number of sales is down slightly from June and also down from the same time period last year. After 5 months of consecutive record highs, we've seen the median home price level off. Let's take a closer look at that. So in July of 2020, the median home price was 635,000. In July of 2021, the median home price is 749,500. That's more than $100,000 gain in improved equity for the person that purchased the median home price in July of last year. Because we've leveled out from June to July, it might be the first sign of a cooler market. Let's take a closer look at this. This is San Diego median home price trends for the last 5 years. And what we can see is each year, home prices dip in December, rise up through the summer, peak in June, July, sometimes as late as August, and then drop back down again. The next year, we peak in June or July, and prices drop again. And that cycle repeats itself year after year after year. This year, that didn't really happen in December. Prices just continue to rise. And we can see that we've risen to this peak in June or July. I think that we may be entering what would be considered more of a traditional seasonal or cyclical market where we have a peak in home prices and sales in the summer months, followed by a drop off that starts in September and goes through December until things pick up again in January. List price to sale price, another sign of a strong, relatively hot market is we've been over 100% since the beginning of the year, and we're at 103.5%. So homes are selling for more than their listing price on average. And what I see representing both buyers and sellers in this marketplace, in the month of July, we had multiple offers on our listings, and for our buyers, we keep competing with multiple offers that tended to push prices up. And that's what I'm seeing in the field on a day-to-day basis, even this month. So the number of active listings here, we can see that the numbers are up slightly from where they were earlier in the year, but still historically low at 3,800. There's a slight relief in inventory. A few more active listings are on the market, but it's only a few. It's not going to have a dramatic effect on sales and volume of sales. This slide shows months of inventory on the national level, and you can see since the beginning of the year, months of inventory has been creeping up, which is typical of a cyclical seasonal market. Realize that even at the lowest, we're at 1.1 here in San Diego, where at the national level, they're at 2.6 months of inventory. So relative to the rest of the country, our months of inventory is very low. Here's average days on the market. You can see that here in California, we're between 15 and 30. In San Diego, we are at 19 days on the market. So a little higher than the United States average, but low historically for here in San Diego. This is the seller traffic index, and we can see that according to the experts, and this data comes from showing time. We can see the number of sellers in California is stabilizing based on the blue color. Now let's see what's happening with buyers. Buyers are still strong with a darker shade of blue. So we have more buyers than we have sellers here in California. And you can see how things are in the rest of the country. Where are mortgage rates going? Well, all the experts expect that interest rates will be going up within the next year, which can have some impact on dampening home prices. So here's a quick summary. The median sale price leveled in July. However, that doesn't mean that we're in for some sort of housing dramatic drop in prices. Inventory is up slightly, but it's still historically low. There are more buyers than sellers in this market. Homes are selling above askings, and interest rates are historically low and forecast to increase. This next slide is from the National Association of Realtors, Lawrence Yun, the chief economist. And this is what I believe and what I see in the marketplace here. Home prices are in no danger of a decline due to tight inventory conditions, but I do expect prices to appreciate at a slower pace by the end of the year. Ideally, the cost for a home, which would rise roughly in line with income growth, which is likely to happen in 2022 as more listings and new construction become available. So I believe this to be true here in San Diego. I think that our inventory is lower than what we're seeing. I know it's lower than what we're seeing on the national level. So I think we may see higher appreciation here in San Diego than other parts of the country just because of our very low inventory. Our summer buyer and seller guides are still available. If you're thinking about buying or selling, these resources are invaluable. And until next time, thank you so much for allowing me the opportunity to share this information with you. If there's anything I can do for you, let me know. And if you're visiting us on YouTube, please subscribe to my channel. Thank you.